we're seeing a bit of volatility coming through on the market. We had a number of companies out with results. Sasini Tea, let's start off with Sasini Tea, reported a 90% drop in after a pre-tax profit. What did you make of those results?
For Sasini Tea, I think it's a case of foreign exchange volatility. You remember last year we had a lot of foreign exchange issues. I think that really affected their bottom line, but I believe the top line was a bit strong for me, was still expected for me.
Top line a bit strong, a bit of volatility coming through for the exchange rate. What are your prospects for the agricultural sector going forward? We are seeing the shilling sitting at around the 85 level, not to the same levels that it was last year.
For the exporters again this year, it might be, I mean, for companies exporting tea and coffee, our main agricultural foreign exchange earners, I expect a strong performance, albeit the foreign exchange volatility might affect their operating expenses because again, they're importing dollars.
Now looking at CFC Stanbic Bank out with results today, that stock down about 2/3% to sit at 42 shillings. Investors not happy with those results, would you say?
Also, the top line was good again. We had the company, we had the bank benefiting from a rise in profits. I mean, from a rise from the volatility of the interest rates seen in the last year and also the beginning of this year. But what made me a bit cautious was their operating expenses again. I had a feeling that was a bit too much.
Operating expenses a bit too much. That stock currently sitting at 42 shillings. Would you be buying into the stock at this stage, or would you be looking at other players within the same sector?
I would be buying that stock and also looking at other players. Remember, it's around 1 month to end of half year. So from there on, we expect the banks to start releasing their half year results. Interest rates have been coming down. Overall interest rates have been, inflation has been coming down. Interest rates have also been coming down, and we know that banks being in business, for them reducing the interest rates for the consumers, on the other hand, it's normally a sticky process. So I expect them to profit from that disparity.
Another company out with results today. So lots of banks reporting. Cooperative Bank, that quarterly profit up 20.4%. What did you make of those results? It seems like all the banks are following a similar trend here.
Yeah, if you look at we've been having a scenario where interest rates have been coming down. And like I've said before, for the consumer, while the banks are able to get cheap funding, the interest expense, on the other hand, is not as cheap. It still remains a bit constant. Actually, it has been more or less constant. The banks have been lending it on aggregate 25%, and deposits are coming in at around 15 to 10%. So really, that disparity is where they're able to profit from. And we can imagine that trend has been going on from the beginning of the year to now. So I still expect solid results from them.
Expecting solid results from some of the banks that we have talked on, but National Bank of Kenya came out with a profit warning saying that Q2 profits are likely to be lower, really on the back of them opening up a lot of branches, but they have not rolled out that agency banking platform. What did you make of this?
If you look at National Bank, it's a bank that is coming from a loss-making streak in the last decade. So even the fact that it's making profits is reason enough to smile for an investor, one. Two, they've really, I think, again, they've lagged behind in terms of rolling out their agency network. We have banks like Equity Bank already covering most of the country. They've already taken up most of the market. Coop Bank, they're also strong in agency banking. KCB, they've rolled out. Family Bank, looking to roll out. For National Bank, the faster they do the agency banking, the better for them, because it cuts down their costs.
Let's just take a look at that 91-day Treasury bill auction of 2 billion shillings. Your thoughts on the kind of rates that we will see coming through for the 5 billion that was auctioned off on Tuesday? Rates fell to about 11.85%. So your thoughts on type of yields we could see coming through for that 91-day Treasury bill?
I could be seeing interest rates coming in a bit higher because at this point in time, given the fact that the central bank has had to come in for the past several days, they've had to come in through repos to mop up excess liquidity. You've seen the Kenya shilling edging upwards. You're seeing levels of 85. I expect them to be at higher interest rates.